We're also tracking DoorDash this morning. This is thing number 2. DoorDash reported a strong fourth quarter, increasing revenue 40% year over year. But how are they helping their consumers battle rising prices from inflation? That's the big question. Joining us now to discuss, we've got Stephen Fox, Fox Advisors founder and CEO. So how are they doing it from your perspective, Stephen?
Well, they're doing a very good job of executing, that's for sure. It's important to remember that DoorDash is a game of inches, not a game of miles, even though they do operate in the last mile. And I think one of the things that they are focused on in this economy is making the goods they're delivering more affordable for the consumer. So they're working down inch by inch on execution and fees that help them stay attractive. The other thing that keeps consumers coming back to DoorDash is the subscriber base. The subscribers get a lot of benefits that make delivery more affordable, especially for people that maybe don't have time for various scheduling reasons to go out and get the food or the groceries that they need. All those things are contributing to a pretty good execution quarter that we think probably continues for the next several quarters.
Stephen, I think this is really the second quarter where I think the street really was surprised by what DoorDash had to say. I look at total order growth year over year, 27%, adjusted operating profits more than doubled year over year in the most recent quarter. Is it just that the street is underestimating how entrenched delivery of food or things are now just continue playing our lives post-pandemic?
Well, it is more entrenched. I think you've seen a big scale up since the pandemic. I think their gross order value is up something like 7 or 8 times versus just 2019, but they're still growing. The growth is going to slow, but at the same time, they're attracting better subscribers, which is adding to order frequency. They are also, like I mentioned, making things more affordable and executing better. But I think the messaging that the street has hung on to is that they are still in investment mode. But even though they're investment mode, this is the key point. Even though they're investment mode, they're talking about generating $500 to $800 million of EBITDA in 2023. And that's a pretty good number. That's about 9% of the revenues we think they'll generate on 20% type of growth. So I think that's a pretty good profit number while you're investing. And last point, they're also showing better returns on their new categories that they're going into. So they're making profit improvements on convenience, which is now on the margin positive in terms of profits and still growing very fast, up 60%. And groceries, the losses there are starting to go down, but it's up 100% year over year in terms of gross order value.
Stephen, what's interesting to me about them getting more and more into things like groceries, delivery of household items, is that also, it increases their potential market, but it also increases who they're competing against. And I'm thinking of Amazon in particular. And whether you're talking about a DoorDash or an Uber Eats that is getting more and more into this business, there's a juggernaut that is in that business. Not quite in the same way, but I just wonder how you're thinking about that part of the competitive landscape.
Yeah, sure. So Amazon is in the last mile, but DoorDash is in the last mile, last hour. I want my groceries delivered in maybe 90 minutes, 60 minutes. I want my food in 20 to 30 minutes. And doing that and executing on that is a hard job. Even if you talk to DoorDash management, they'll say delivering groceries is not easy. And they have a lot of areas where they need to improve efficiencies, quality, which in turn brings customers back more and more. So I think it's a bit of a different ball game. The other interesting point is that DoorDash was founded at sort of the advent of e-commerce. And so they're building a network that fits the e-commerce age better than anybody else outside of like an Uber on the planet. And so I think that also is giving them advantages as you think about like guys like Amazon. And last point on that question would be, they're only, and I say this only because they just grew from 10 million subscribers to 15 million subscribers in 1 year. But relative to their available market or relative to like a prime subscriber base, that's still early days.
Steve, while we have you, there's been a push, whether you're purchasing an Airbnb rental or whether you're purchasing some type of concert ticket or, in this case, just trying to get some food delivered, a push for fee transparency. Now, one of the issues that you do highlight is the fact that there could be this mandated wage increase for food delivery workers and in specific cities. That's something that all of the gig economy has had to consider at one point or another. Do you see that impacting DoorDash in the long run and some of its competitors? And to what extent can they still push through price increases or fees?
Yeah, so that's an interesting concept because one, it goes back to the efficiency question. One of the ways that these companies, including Uber and including Lyft, are going to battle higher costs is through improving efficiencies. These are networks that, as you put more people on the network, they become more efficient. You develop different types of learnings. You leverage AI and machine learning, et cetera. But on top of that, yes, you're going to see some of those costs pass through to the consumer. How that affects their demand ultimately is to be decided, but it's a very complex business that they're running. And you're referring to the near-term potential in New York City, which New York is probably less than 5% of their gross bookings in the last quarter. So that's one piece of the puzzle, but there's dozens others to consider. And also the fact that they are investing at a certain rate, which they can adjust on the fly based on what they're seeing in their markets.
Fox Advisors founder and CEO Stephen Fox. Have a great weekend. Talk to you soon.
Great. You too. Thank you.